Just admit it. Crypto's had a wild 2025, but we're not done yet. History and analysts hint at one last leg up, at the very least. Or maybe it's just too much hopium ready to sucker punch us right at the end. We're exit liquidity again. They got us again. The signals are mixed. The stakes are high. But as always, we dig deeper to find the real score. You don't want to miss this. We all want Bitcoin and our altcoin bags to go to the absolute moon. And the good news, there are still plenty of reasons to believe that the cycle has not topped. In fact, I believe it's far from topping. For one, Q4 has historically been Bitcoin's best performing quarter, averaging nearly 80% gains since 2013. So if you're a betting man, we are, the odds are in your favor. Now, a lot of people are saying the 4-year cycle is dead, and I tend to kind of agree with them, but that includes some real OGs like Bitwise's Matt Hugan, and maybe he's right. But let's throw it out there anyway, just in case history still rhymes. And this is it. You have 3 months left to make it big, after which brutal, horrific, horrendous crypto winter comes. Q4 of 2025 is about 500 to 550 days after the last Bitcoin halving, which historically lines up with previous cycle tops. If that pattern holds, big if, well, we might be setting up for one last explosive move before the year ends. I think a local top's coming, but some people still think the 4-year top's gonna be the thing. So here's where it gets interesting. If the 4-year cycle really is dead, it's actually mega bullish because it would mean Bitcoin has matured beyond just retail-driven halving hype. Today, price action is less about miners and halvings and more about global liquidity, ETFs, and institutional flows. BlackRock, okay? ETFs are basically turning Bitcoin into a macro asset class. Money now flows in through pension funds, wealth managers, institutions, people that don't care about influencer predictions on social media or about a 4-year cycle, man. They don't care. Maybe they're watching the business cycle. They certainly aren't thinking about this rigid 4-year structure. These asset managers now hold over 1.6 million BTC, worth more than $162 billion, which is about the GDP of a small country like Kuwait. Then you go and add rate cuts on top of that, putting gasoline on the fire, baby. When central banks like the Federal Reserve start easing, that means that money gets cheaper, liquidity expands, and that fuel usually finds its way into risk assets. And the cheaper the money gets, the more fuel gets put on the fire. Cheaper credit means businesses can borrow, expand, and hire more people, putting extra cash in consumer hands. That spending either flows back into the economy or gets parked in investments. When rates drop, the risk on switch flips fast. Suddenly, safe bonds look boring and actually dangerous. Investors start chasing big gains again. They want the stocks, they want the crypto, they want the dog coins, if the mania gets loud enough, of course. The September rate cut from Papa Powell was only the beginning. Markets are already pricing in 2 more cuts by the end of the year. If Bitcoin's pushing $125,000 with current rates, imagine what happens when we stack a couple more 25 basis point cuts on top of that, because 75 basis points of cuts in total, that actually means something. 25 basis points doesn't help a lot of people. 75 basis points, now we're talking. That's the kind of setup that can stretch this bull market phase well beyond what old cycle models ever predicted. And guess what? Gold just smashed a new all-time high, and that's not bearish, it's actually how the money flow works. According to crypto quant contributor XWin Research Japan, when central banks start cutting rates, well, what we see is that institutional capital first moves into high liquidity assets like equities and gold. It's the safest way to ride the early wave of liquidity. Crypto, being the riskiest of the bunch, sits at the end of the chain. The money takes time to get there, but it does get there. There's a very strong correlation between the moves of gold and the moves of Bitcoin, and it tends to be a delayed effect. Take a look at this chart here shared by Miles. It perfectly lines up with what we're talking about. And if you love charts, well, that's something we do every day, of course, in our private Discord channel, link down below. Go check it out. Now going back, so Bitcoin's market cycles tend to trail the global M2 money supply and gold's performance by a few months. So liquidity leads, gold reacts, Bitcoin follows, Ethereum follows that, dog coins follow that. That's the flow, okay? Right now, a lot of stablecoin liquidity is still sitting on the sidelines or parked off exchange, waiting for confirmation. Once that capital starts rotating back into the market, guess what? Bitcoin will be next in line. We're already starting to see the early moves of that. Historically, Bitcoin doesn't lead, it lags, then it leaps, okay? It makes up for any lag in record time. So if gold is breaking records right now, which it is, that might just be the early signal that crypto's next leg is getting ready for a major, major move. Now, before we get into the final part of this conversation, guys, if you're trading crypto coins, there's a link down below. It's for BitUnix. I have the question for you. Will you start taking your crypto trading seriously? Will you move over to an exchange that respects your privacy and that gives you insane bonuses to sign up? The answer should be yes. Never been a better time to sign up. No KYC, no VPN, no BS, available to anyone, anywhere. That's you. Deep liquidity on all the Bitcoins. List all the Bitcoins straight away. And $700 deposit bonus when depositing $10,000 or more. $400 deposit bonus when depositing $2,000 or more. These are crazy deals. Insane trading bonuses. And we're giving away $1,000 every single live stream for the entire month of October. You could be into winning that $1,000. All you have to do is use the link down below to get signed up. Thank you very much. So back to this. Look. Life isn't all unicorns and rainbows, in case you haven't figured it out now. We have to look at the flip side. Since no one has a crystal ball, certainly not this guy, it's only smart to consider the bear case. What if the 4-year cycle is indeed not dead? We are actually nearing the final leg. You have 90 days, maybe max, to make it all, to make it big, to cash out and run away before the horrific bear market comes. All this extended cycle bullshit, fallen business cycle, it's all just a fugazi, man, okay? Remember, Bitcoin crashed below $16,000 at the bottom of the last bear market. It's now sitting above $120,000. It's a 7x move already. Huge by any standard. The last halving happened on April 20th, 2024, and historically, cycle peaks tend to arrive 500 to 550 days after that. So either we have seen the top or we'll be seeing the top around the end of October or sometime into November, which would match up with the 4-year cycle theory. So if the cycle is still intact and the 4-year cycle theory remains undefeated, we're either sitting right at the top, which I don't think we are, or staring straight at it slightly above us around maybe 150, 160K. Now let's dig into some more of this bearishness. By the way, bears are dirty, disgusting animals. Don't forget. Now, did you know that the OG Bitcoin Treasury Company strategy lost its 200-day EMA and traded below it in September? It has since reclaimed this, but the last time this happened, it was a canary in the coal mine for the bear market. And speaking of treasury companies, according to a September report, institutions that were stacking like there was no tomorrow just a few months ago have sharply decreased their purchases because the MNAV, of course, has dropped significantly for these companies, and they can't just keep issuing equity like there's no tomorrow. Investors are starting to wise up. Data from CryptoQuant shows acquisitions plunged from 64,000 BTC in July to just 12,600 in August, which is still significant, but it ain't no July numbers. September barely reached 15,500 BTC, a 70% decline from early summer highs, and that's not all. U.S. regulators are also examining potential insider trading in the shares of these firms that are turning into digital asset treasury companies. The probe covers more than 200 issuers that disclosed cryptocurrencies in their reserves. That's pretty damn big. Now let's cross our fingers this will not be another FTX level drama that has a systemic risk to the market and results in hundreds of thousands of Bitcoin being sold at the bottom of the market. Investors are also seen rotating into stocks, and who can blame them, with AI stocks like Nvidia putting in higher gains than Bitcoin this cycle. Stocks have been very attractive, a lot less bullshit than crypto, to be honest, okay? So rotating to tech stocks has been a wise decision so far. Nobody really knows if the bull or bears end up winning, okay? We'll get this extended cycle, goes well into 2026, or the 4-year cycle on, and we got 90 days max. Look, personally, I'm bullish as fuck here, okay? Investors are rotating out, but I see it as temporary. Treasury companies are slowing down, and some might be in trouble. Of course, we always said that about treasury companies. I see it as a pause before the market moons, because unlike before, when big money wouldn't touch Bitcoin with a 10-foot pole, they're now all in hook, line, and sinker. You have major investment firms out here saying that, well, investors should have 2 to 4% of their portfolio into Bitcoin at the major banking houses, okay? The world's 2 most powerful people, Trump and BlackRock's Larry Fink, are now crypto's biggest ambassadors. And don't forget, the Fed has already started cutting rates, which means cheaper money fueling the next leg. These things take time to work their way through the economy. The business cycle has barely started. It's got a lot of expansion, way away from the top, okay? Plus, sovereign nations are now considering Bitcoin reserves. We've had a dozen announcements at least this year. Worst case, we get the cycle top in Q4, which is not so bad after all. We started at 16K from the bear market bottom. It goes to 160K in December. 10X for anybody that bought at the bottom. Not bad. But I think that'll be the local top in December. And we'll have a big enough pullback to scare everybody to think that it's all over before we rage higher in 2026. But you let me know what you think. Are you going to be a 4-year cycle theorist or an extended cycle theorist? Hit me up down below. Thanks for watching.